Hello everybody. So another bloody day in the markets today. There's 3 stocks on my radar that I want to discuss. But really briefly, as always with these days, it's a sea of red and the NASDAQ is the first impacted, down minus 2.70%. And it's understandable, the NASDAQ being the top or the heavyweights in the S&P 500, and so they drop more. This is a problem with indexization and everything index. Why is it red? Pundits will try to tell you it's red because of the PCE. The PCE was a little hotter, but it was not really a surprise. The PCE is the less followed metric of inflation. The pundits, again, the journalists will tell you it's tariffs. But then again, yeah, tariffs are going on April 2nd, sure, but we're already seeing adjustments here and there. We're seeing help here and there. Today, the big news was the interest deduction available for US-made cars, and that didn't prevent Tesla from dropping nearly 4%, even though they are the most US-made cars. So anyways, it's just noise. This is likely the reason why everything's down, is everything's traded together as a bucket. And so money managers just trade the market, they trade the sentiment, and stocks are getting dumped, and they're getting dumped oftentimes through none of their fault. It's not their fault, it's just the madness of the market. This leads to incredible opportunities. Hence, the 3 stocks I want to talk about, 3 stocks that I don't understand why they're so cheap. Stock number 1 is HIMS. HIMS, I don't get it, So, of course, HIMS peaked nearly $70. That was now 2 months ago. Seems like a long while back. But now it's back at $29. So volatility is alive and well on this stock. It's down 23% in a matter of 3 days. So think about the volatility on that. That's why HIMS is getting more and more popular with people playing options and the options game, because you can harness the volatility on HIMS just like you can harness the volatility on MicroStrategy. It's frankly unheard of how volatile this stock is, considering the business is 90+% a subscription recurring revenue defensive business, where once people have a drug, once people have a pill prescribed to them, they're not going to switch. They're going to stay on that 54 on average price, average basket for HIMS, $54 a month pill for their hair loss, their ED, their heart health, whatever it is. They're going to stay on that pill. That's what HIMS is doing. HIMS is doing the pharmacy and the doctor business, the mom and pop doctor and your local pharmacy. HIMS is disrupting both all in one by going after highly profitable verticals. And sure enough, when you look at the revenue growth of HIMS, you can see that the growth has accelerated. That acceleration was confirmed last quarter with the weight loss category still growing quicker than the rest of the business and still being a major tailwind for the business. We've had an inflection where this business was already growing very, very fast. And over the past 2 quarters, it's been growing even faster. And of course, the big bad news for HIMS was that semaglutide was not in shortage anymore. And so they have to stop selling semaglutide mid-May. But, the big question is, first of all, is this priced in? I definitely think so, because when the news came out, the stock nearly halved, essentially. So that's number 1. But then number 2, how many people are actually going to switch off to other categories? I think a lot of people are going to switch off to oral pills like metformin, for example, or bupropion, metformin-based pills, which get really good results. And they may also switch to liraglutide, which is the generic for Saxenda or Victoza, which is the original GLP-1, which is now off patent, and that HIMS is going to manufacture themselves. They have one of the board members is a former Teva pharmaceutical leader, and they acquired a peptide manufacturing facility. So my guess is that a lot of these customers are going to switch to liraglutide, and this is true for HIMS, this is true for LifeMD, this is true for a lot of these companies in that space that are just selling these weight loss drugs. I think they'll move a lot of people to oral solutions for weight loss or to GLP-1. Anyways, this stock has been unfairly categorized into a weight loss story. I've owned this stock long enough to remember the days where it was unfairly categorized as only an ED pill story. And so who knows what else the market is going to categorize it at in the future. The point is the valuation is very, very cheap right now. It's trading on enterprise value over gross profit over revenue growth of 0.087. It's getting back to the levels of cheapness that we used to have on this one. That used to be a 0.05, 0.06 for the longest time. We're getting back to these levels, but of course the business is much bigger, much better today, much higher performing. Since I started buying this stock, and discussed it on the channel. This stock was one of very, very early stocks I covered on the channel. I was paying up 100% more than the folks on Twitter who first saw this stock and were paying $3. I started buying this stock in the $6 to $8 range. So really, I was paying up 100%. You can see it's up 400% still then, despite it having dropped 50% plus from the peak. This stock has returned average annual return of 85% over the prior 2 and 8 months, 2 and 7 months. Will this keep going? I think so. That's why I own the stock, and I bought some more today at 29. This is getting into my buy zone territory. I think I will buy this stock heavily if it were to drop in this $26, $27 range. Moving on to another stock that is another channel, darling, number 1 or number 2 on the channel, depending on, the time of the month. Tesla is another big stock that I own. Most of my viewers disagree with me on Tesla, at least not most of my viewers. Most of the people who comment on my videos disagree on Tesla, but they don't necessarily disagree on MicroStrategy. A lot of people like MicroStrategy. MicroStrategy, I'm not showing the average annual return for the past 4 years for MicroStrategy because that would be indecent. So I don't want to show that on this video, but of course, this is the highest performing stock on the S&P 500. No, sorry, in the whole market. They're not in the S&P. They're not in the S&P. They should be, if you ask me, but they're not. But in the whole market, this is the highest performing stock. It's neck and neck with Nvidia, depending on where you look at. At least out of the big stocks, it's the best performing stock out there. This is a true success story. This company moved from $1 billion company to now a $76 billion company market cap, despite dropping from over $500 a share. So you're looking at a 76x in a matter of 4 years. That's how high the performance has been on MicroStrategy. Down today 11%. And I don't know why. Usually the stock doesn't move down this much. It trades usually much more in line with Bitcoin, and Bitcoin today had a yawn-inducing day. It barely moved more than QQQ today. Some days it moves a little less than QQQ, believe it or not. But it's back at 84. Frankly, my running joke with Bitcoin for the past month and a half has been that Bitcoin is the new stable coin. That's been my own joke. It's yawn-inducing. Bitcoin barely down. I remember the days where Bitcoin was down 15-20% on a single day. These days seem to be long gone now. But the point is, the performance of MicroStrategy is not yawn-inducing. Minus 11% today, and so why it seems to be that this brutal price action is due to some rumors. So of course, a lot of people in crypto, they love to read charts, and people are saying, oh look, he's using the ATM, and that's what a lot of folks do in this world. They read charts. Probably he was ATM aiming. I don't know. I don't think so. I'd be surprised. I think it's weird that he would do it on the common, but maybe he has a buying opportunity or something, or maybe he knows something we don't. I think the stock is more likely down because I see a lot of rumors on Twitter about an acquisition coming, and people are fearful that this could be a minor acquisition. And so if they were to acquire a minor, a lot of people are saying, well, wait a minute, that would be an operational business now, and they're not as excited about that. Anyways, MicroStrategy is getting a little cheaper, 1.78. So we were closing in on almost a 2x a few days ago. Now it's 1.79, 1.78. So again, are we going to get back to 1.5? If we are, I will buy. But I haven't bought at these levels. I still want it cheaper than that to the portfolio. This is top 1 or top 2 position, depending on the time you look. And lastly, a stock that I bought today. A newcomer to the portfolio. This is not the first time I added to the portfolio, but it's a newcomer, and this stock is Nebius Group. So Nebius Group, of course, is a spin-off of Yandex. Well, it's not really a spin-off, but it is the CEO and the top management team of Yandex. They left Russia and they came to Europe and they founded this company in the Netherlands, and they came with a lot of their assets. And a lot of people, this is the running joke on the internet, modern day popular culture. Jim Cramer doesn't like Nebius. So I think that's important to point out, that Jim Cramer doesn't like it. And so stocks tend to go up when he doesn't like a stock. I think a lot of comparisons are being drawn between Nebius and CoreWeave, but CoreWeave, of course, is the American company. It's the company that's discussed by Wall Street, that Wall Street is excited about. It's the brand new IPO, the brand new issue. Nebius is flying under the radar, and it definitely is right now. It's down 53% from February 18. Think about the volatility on that stock. Another great stock for folks who do options. When I look at Nebius in my valuation, so I've updated it from this video, but if you look at this video, you'll see that when I covered it more than a month ago, it was twice as expensive as it is today. And so today we are almost under 0.1 on enterprise value over gross profit over earning growth, almost there. They gave us guidance. They gave us positive territory on adjusted EBITDA during 2025. So they will cross positivity on EBITDA. So they will be cash flow positive, right? Adjusted EBITDA is my preferred proxy for cash flow. So they will be positive. So this should help the rule of 40. The rule of 40 right now is meaningless because I don't know how many hundreds of percents of forward revenue growth to give Nebius. And I think analysts don't know how to do that. The guidance they gave us was 3 to 4x revenue to 500 and 700 million. That's what they think they will grow revenue. They think they will 3 to 4x revenue in 2025. That's what they think they'll do. So I'm betting 400% next 12 months revenue growth, but I really don't know. Could it be more? Could it be less? It doesn't really matter because it's so cheap that, given the sector, given that this is in one of the hottest sectors in the market, this is in AI, they have major backing from NVIDIA. They got hundreds of millions of dollars of investment from NVIDIA. And you have some people who argue, and they may be right, I don't know too much that SaaS part of the business, but some people argue that their 28% stake in ClickHouse alone is worth the enterprise value of that business. Because don't be fooled. If you look at that business, it's a $5 billion market cap, sure, but actually, if you look at enterprise value, because they have nearly $2.5 billion of cash on the balance sheet, enterprise value is 2.85. Some people argue that 2.85 alone is the value of ClickHouse. And sure enough, depending on how and when you look at SaaS, you could come up with these valuations. So I find the stock very, very cheap. I obviously like it much more at $22 than I liked it at, 40-ish, 45-ish dollars. I like it much more now. And today, with today's drop, the stock dropped more than 12%. I especially like it. That's why I added it to my portfolio. If you want to know more, my full analysis on Nebius is available here on my channel, so feel free to look it up, and it's available here. I'm surprised this one got so many views, 7,000 views. I thought it was flying under a radar. Perhaps not flying under the radar of Beat the Denominator's viewers. So anyways, these are the 3 stocks that I'm looking at right now in a post-crash world after this Friday crash, and it's becoming a habit now for us to have a Friday crash. This was not investment advice, not financial advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on X, follow me on Patreon. Thank you for watching, and have a wonderful, wonderful day.